24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pettit. We've got the Dow, the S&P, Nasdaq very much on the minus side on this Friday here, on track for a losing week. Only 4 trading days this week, but Nasdaq on the week down more than 6%. Year to date, Nasdaq is down 10.7%. Right now, the Nasdaq Composite Index is down 1.4%, down 196. The Nasdaq 100 Index is down 1.4%. S&P lower by 44, down 1%. Dow Industrials down 200, a drop there of 0.6%. Shaky company earnings and the prospect of higher U.S. borrowing costs are fueling market jitters. Among those corporate earnings, Netflix, those stocks, those shares plunging now by 21%. 10-year yield 1.75%. Spot gold down 0.4%, 18.31 the ounce, and West Texas Intermediate crude is down 0.7, 84.97 a barrel. A Boeing 737 MAX operated by China Southern Airlines took to the skies today, a sign that the jet is nearing a resumption of commercial service in China, one of the last major markets where the model remains idled. Boeing shares lower now by 2.9%. I'm Charlie Pettit. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. So Tim and I just kicking around some of the headlines out there when it comes to the pandemic. Booster doses of COVID-19 vaccines. This is really, I think, the big one of the day, showing that they increase protection against both the Delta and Omicron variants in 3 studies that looked at infections, hospital admissions, and deaths in thousands of U.S. patients. I think that's a big one. And we're seeing, as you said, it feels like things are peaking in New York City.
Yeah, they certainly are in New York City. But we should note Kathy Hochul, the governor of the state, said that pressure on healthcare facilities remains high, and we're not seeing it break evenly throughout the state, Carol. So what we're seeing anecdotally and through the data in New York City is certainly a good thing. But the state and the country have a long way to go.
All right, so let's see what Dr. Ian Lustbader sees right now. Clinical professor of medicine at NYU Langone, back with us on the phone in New York City, as he does on most Fridays. Ian, good to have you back. How are you?
Always a pleasure, guys. Happy Friday. Hopefully everyone's feeling well. Carol?
Yeah, well, here's the deal. And all right,
He knows you're at home.
If you were my doctor, I would have said, listen, the day I took a rapid and a PCR, the rapid came back positive, the PCR came back negative, and then I've taken a bunch of rapids at home while I've been sequestering.
I think banished is the term from the office.
Yeah, Bloomberg banishes you pretty carefully, which is why we love their protocols. But I've had all then subsequent negative rapids. So I have had no symptoms. My family hasn't. So we are assuming I really actually didn't have COVID. Does that feel right to you?
You could have had a false positive. That's possible. Or you most likely were exposed, since everyone will be exposed along the way. And many people, you were in a position with a number of my patients. I had a test. I might have symptoms. I might not have symptoms. What do? I might have taken a test because I'm visiting a relative, or I had the sniffles. You know, and really we treat everyone similarly, which is try not to infect other people, even though we know that people tend to be more infectious before they have any symptoms, you know, five or 7 days before that.
Right.
And treat symptomatically, you know, fluids, bed rest, make sure your, you know, vitamin D levels are good, and maybe old zinc. And most people do well. And we've really seen that there probably is some benefit to vaccines, and that could be why in some people they have a very mild or asymptomatic, you know, course. We're seeing a lot of kind of cross currents. The UK basically saying, look, we're giving up on mandates and all of that. Let's just, you know, we give up. Yeah, right. Omicron, you win. And in Israel, you know, the 4th shot, they've really sort of a very selective group, elderly, you know, people or people with immunocompromised. But there were several studies out of the MMWR, Morbidity and Mortality Weekly Report, a great journal if you want to subscribe to it. I can get it for you at a discount. It's MMWR is great. And they really review a lot of data. And they reviewed a few studies which have complex titles, COVID-19 incidence and death rates among unvaccinated and fully vaccinated adults, with or without booster doses during periods of Delta and Omicron. This was from April 4th to December 25th.
Right.
There are a number of studies. I won't belabor it. But they did show that, for example, the number of cases in the unvaccinated were about 6.8 million in this group, 2.9 in the vaccinated group. So definitely some reduction in cases, and also a reduction in death rates, about 94,000 in the unvaccinated, about 22,000 in the vaccinated. So it does appear vaccines, can be helpful, play a role.
Right.
Part of the problem in teasing out all this data is that there's an overlap of Delta and Omicron, and we know that the Omicron has more mutations.
I'm sorry. No. Forgive me, because I love that you were going through all of that. I guess what I want to ask you, though, then, is how do I, sorry, I'm being really personal, but but I'm trying to understand that. I mean, I absolutely had no symptoms. So do I chalk it up to a false positive? Is that likely on a rapid when everything else came in negative?
I don't believe so. I think you were, you've got a child. You're out, traveling around. There are many people who will be exposed, have really no symptoms at all, have a positive test. You just happen to catch it at a certain time. Granted, there are false positive and false negative tests. But I think you probably really were exposed. Your immune system is good. You probably had minimal symptoms, and some people just have even, sniffles or a little cough. They think it could be allergies. But you did the prudent thing, and we can check your antibodies, see if they're elevated. Although again, there's a poor correlation between how high your antibodies are and sort of how much you're protected. But we're going to see a lot of this as people are doing more tests. We're going to be getting a lot more positives, and people say, "What do I do?"
Sorry, Tim. My personal consultation with Dr. Lustbader.
No, this is great because I've been just under the assumption that you had a false positive, given that all the other tests, especially the PCRs, have shown that you were negative. Hey, Dr. Lustbader, before you go, speak to the anecdotal data and the actual data that we are seeing here in the Northeast when it comes to Omicron. Is this the end of COVID? We have about 30 seconds.
I think we are coming down in the next few weeks. The number of cases have peaked, in my opinion. Hospitalizations are under control. The people who are getting sick have comorbid conditions, diabetes, obesity, COPD. So I think there's light at the end of the tunnel. Not yet. I think we still have several more weeks. But I think in the not too distant future, we'll have new topics to talk about, unless we unfortunately get a new variant. I don't think we will. But there's still a global pandemic. The rest of the world still has a lot of work to do.
We're looking forward to talking to lots of other things with you in the future. Fingers crossed, and hopefully you're doing well. You sound like you're getting over still your cold. Dr. Ian Lustbader over at NYU Landcode on the phone in New York.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening to Bloomberg Business Week on this, yippee, it's Friday.
You don't sound as excited as you should be.
I know. I'm getting a little tired.
Okay, well, it's a working from home thing. You know, we'll get you back here on Monday, get the energy back in studio in person, right?
It'll feel really good.
Yeah.
Or maybe I have to get on my Peloton.
Oh, maybe you do. You have one.
I do.
You still paying that monthly subscription?
I am.
All right. Well, you're not part of the problem.
I'm not part of the problem.
You already have a Peloton. Well, we are gonna talk Peloton and what's been happening with the company in just a few minutes. Also hit on Netflix as well with Ed Ludlow, our West Coast correspondent. But first, a check of what is going on with this trading day. We got about an hour and a half left. Hey, Charlie Pellet.
Well, speaking of Peloton, here's what's going on. We have got Peloton shares up by 12.5%. Carol paying the bill. Netflix, another major story making news today. Netflix, after earnings, plunging now by 21.8%. Among some of the other streaming services, they're down as well. Roku, for example, down 7.9%. Walt Disney plunging 6.5%. Bottom line here, red on the screen, stocks falling in a choppy day of trading. Shaky corporate earnings and the prospect of higher U.S. borrowing costs are fueling market jitters. The Dow, the S&P, Nasdaq all slumping, with the S&P down 1.2%. We're on track for a losing week here. Nasdaq lower now by 256 points. The selling continues for Nasdaq, down 1.8%. Year to date, Nasdaq is now down by 11.1%, so an 11% drop for the month of January for Nasdaq. The Dow today down 261, down 0.8%. 10-year up 13.30, 10-year yield 1.75%. Spot gold down 0.5, 18.30 the ounce. West Texas Intermediate crude down 0.6%, 85.08 a barrel on WTI. The U.S. hospital staffing shortage, exacerbated by the latest COVID-19 wave, is showing signs of easing, but many West Coast and rural states are still seeing the worst of it. According to data from the Department of Health and Human Services, over the past 7 days, about 16% of U.S. hospitals have reported critical staffing shortages, down from a recent peak of 18.7% on January 9th. Fewer facilities are reporting shortages in New York, Florida, and Illinois. So how is the Omicron variant affecting case counts? Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
We're seeing Omicron being less severe, but because it's so transmissible, it's increasing case numbers, and therefore that slightly lower severity rate is being sort of trumped by the fact that case numbers are just expanding so high.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking those vaccine stocks, lower across the board. Pfizer, for example, down 2.5%. Its German partner BioNTech, its ADRs down 6%. AstraZeneca's ADRs down 1.9%. Moderna out of Cambridge, Massachusetts, down 5.3%. J&J down by 0.1%. Recapping, 10-year yield 1.75%. Spot gold down 0.5. Bitcoin with a 38,000 handle right now, and crude West Texas Intermediate down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Peloton, thank you so much. Let's talk about Peloton and Netflix a little bit further, because these stocks, these pandemic plays, they were, rallying big time until they were not. So let's get to it.
Ed Ludlow is West Coast correspondent for Bloomberg News. He joins us on camera from our San Francisco bureau, so you can see him on YouTube right now. Ed, do you want to start with Netflix or Peloton?
You choose.
Okay, I'll choose.
I'm game to talk both.
Okay, let's talk Netflix here, because that's certainly the big story. Look, it's having its worst day in years right now. At one point today, at its lowest point, its worst day in more than a decade. It was a different company then.
Yes.
What are you seeing? What are you hearing from your reporting? What is happening?
A lot's happening. And, last night, Netflix has its earnings call. And for the radio audience, I'm using my fingers to show inverted commas, because what they do is they dump a pre-recorded video on YouTube. And so you watch through it, you can record it, rewind. And something I picked up on, executives said they couldn't put their finger on, they couldn't pinpoint why subscriber growth has slowed or why it hasn't returned to pre-pandemic levels. They said they couldn't pinpoint it. But then they proceeded to give a very long list of reasons as to why subscriber growth has stalled. And it ranges from the macro picture, right? We always think about Netflix in the context of North America. We're guilty of that because I watch a lot of Netflix, guys, a lot.
You're not
and
alone.
I'm in America. Of course exactly. But 60% of the company's revenue comes from outside the US. In countries like regions like Latin America, where the economy is under much more duress than we currently have it in the United States. They are facing currency headwinds because of that business outside the US. And so they say that revenue will be down $1 billion in 2022 because of that currency headwind. It will also impact margin by 2%. But the main takeaway is competition. How many streaming services are there out there that we as consumers have a choice in right now? And what makes Netflix any better if the pipeline of content is delayed and we're not getting those new shows that we crave, like Bridgerton, until the end of this quarter?
You had to remind me. Soon, soon, soon. Hey, first of all, you're looking great on YouTube. I'm watching you on YouTube.
Thank you.
Just search on Bloomberg Global News for all of you who want to see Ed as well. What's interesting, too, is, okay, so that subscriber number, a big bummer. They still have, 225 million global subscribers. Yes. I mean, that is, you were just talking about international, and, Argita Ranganathan saying that when it comes to content execution, when it comes to foreign language content, they are killers. Look at Squid Games.
Yeah, I mean, look, as a student of the Bloomberg terminal, right, all you can do is look at the data, and Netflix forecasts first quarter subscriber net additions of 2.5 million, but the street was looking for more than double that. And the average analyst consensus estimate, right? They themselves in the prior quarter had said they were looking for 8 million. So it's really hard to understand why their guidance was so off. What materially changed in the last month of 2021 and the first month of this year that they got it so wrong? And it's really hard to understand that because things are difficult right now with Omicron, with consumer behaviors, with inflation, but they're not so different today on the 21st of January than they were, say, at the beginning of December.
Hey, Ed, in the last minute we have with you, let's talk Peloton. Yesterday, just a brutal day for the company. We actually got a pre-release of earnings, but shares are rallying by over 12% right now. Are analysts saying yesterday was the bottom for Peloton, at least this time around?
Yes. Yeah, so look, good data, churn. People are sticking with Peloton. I'm a Peloton user. I believe Carol's a Peloton user. But go back to their prior earnings and look at the data point that shows the number of hours existing users are using on their bike. It's much less. And the same question for Netflix. What drives future growth? What brings new people that haven't used Peloton before back? And that's what they're addressing here. They were really honest in saying cut capacity of production, scale back the number of devices that they're making, and reduce workforce because the growth they experienced in the pandemic era is over, sadly.
Well, and I think John Foley, right, coming out, making those comments, too, about kind of a production, resetting production levels for sustainable growth. I mean, we have to start thinking about what is life like post-pandemic, and some of those crazy growth levels aren't going to exist in a world that is reopening and we have different choices. Ed Ludlow, we love you. Thank you so much. Ed Ludlow joining us from our San Francisco bureau.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. The Biden administration is applauding Intel's plan to build a chip-making hub on the outskirts of Columbus, Ohio. Commerce Secretary Gina Raimondo says making chips here in the U.S. will tamp down inflation.
Car prices are currently driving a third of inflation. Why? Because we don't have enough chips. Last year, automakers made nearly 8 million fewer cars than they could have because of the semiconductor chip shortage.
Raimondo says manufacturing chips domestically will also improve our supply chains and create American jobs. Congress is currently considering a proposal to offer about $50 billion in incentives to companies that are willing to locate chip production in the U.S. Well, no breakthroughs on Ukraine are being reported following today's meeting between Secretary of State Antony Blinken and Russian Foreign Minister Sergei Lavrov. Blinken did say the U.S. will give Moscow written responses to Russian proposals next week. White House Press Secretary Jen Psaki says that means it'll be a busy weekend.
The president will meet this weekend at Camp David with his national security team to discuss the situation. Some will be virtual, some will be there in person. We'll also continue to consult with our allies and partners, and we will respond next week in writing.
Psaki says it'll be up to Russia on which path to choose. A U.S. judge in Texas is putting the Biden administration's vaccine mandate for federal workers on hold. Judge Jeffrey Brown says the policy amounts to a presidential mandate all federal employees consent to what he called a medical procedure or lose their jobs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic. We are Bloomberg Business Week on Bloomberg Radio, and we're going to talk about China hosting another round of Olympic Games, those games just around the corner. It's the cover story of Bloomberg Business Week magazine. In the meantime, another story, Tim, on the terminal, and this is, again, more about what China's doing when it comes to big technology and just corruption generally in its industries.
Yeah, we've been following Chinese stocks closely, for a long time here, but over the last year, they've taken a huge decline, a huge hit as a result of concerns over the growing power of big tech in China and what the government is going to do in response. In that same vein, China's vowing to curb the influence of tech companies and root out corruption tied to the, quote, disorderly, that's what it's, expansion of capital, a sign that authorities may expand a regulatory crackdown that has erased more than $1 trillion of market value last year.
This is really interesting, too. It looks like China's got a documentary. China's Central Television has a documentary. Yeah. It's a 5-part documentary series. It's called Zero Tolerance. And as a result, we saw Alibaba Group take a hit in Hong Kong overnight after that documentary, I guess, began, and it coincides with this anti-graft meeting. And it's interesting, an episode that was featured on Wednesday night, I believe, in China. It featured a former party chief of Eastern Hangzhou City who allegedly used his influence to help his younger brother's business. We're talking about Alibaba, one of which included Jack Ma's Ant Group as an investor. So I guess that's the connection there in terms of it. And this was according to a local media report back in August. So they're looking at it much more deeply.
Okay, so the Central Commission for Discipline and Inspection said in a statement, quote, efforts will be made to investigate and punish corrupt behaviors behind the disorderly expansion of capital and platform monopolies and cut off the link between power and capital. Quote, show no mercy to those who engage in political gangs, small circles, and interest groups within the party, and strictly educate, manage, and supervise young cadres.
They have made their mission very clear. And I just want to clarify that former party chief is not brothers with Jack Ma, if it came out that way. But anyway, they're increasingly getting tough when it comes to technology. China. We're going to talk more in just a moment.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got equities holding close to session lows. Red on the screen, the Dow, the S&P, Nasdaq, all lower. 50-point drop right now for the S&P, down 1.1%. Nasdaq lower by 224 points, drop there of 1.6% today. So far for January, Nasdaq is down 10.9%. The Nasdaq 100 index down today by 1.6%. The Dow lower by 249, drop there of 0.7%. 10 years up 15 seconds. 10-year yield 1.75%. Gold down 0.4, 18.32 the ounce. Bitcoin plunging 7.4%. Bitcoin 38,255 on Bitcoin. West Texas Intermediate crude down 0.6%, 85.08 a barrel. Choppy day of trading, shaky corporate earnings. Netflix, for example, lower by 22% on the prospect of higher borrowing costs fueling market jitters. Briefly, American Airlines Group and its flight attendants have agreed to change the carrier's onboard food service to maximize the amount of time that passengers keep their face masks on. American Airlines down 2.8% today. Paramount delaying 2 Mission Impossible films into 2023 and 2024. I'm Charlie Pellet. That is a Bloomberg Business Flash.
What are the airlines going to have, like syringes and just inject our mouths?
You know, I got to tell you, I got to be honest, Carol. I got to tell you, I was flying back from Canada on Thursday. I got an email on Monday, actually. I got an email from the airline that said, due to supply chain issues, we will not have food on this flight. So buy your food ahead of time. And they repeated it again on the plane. Supply chain issues.
I just think they don't want to do it
Yeah,
anymore.
I think so too.
I don't blame them. All right, well, the new issue of Bloomberg Business Week is out, and it actually has some great advice, too, on places to travel, including Anguilla. But you'll have to check out our week. I know, I'm obsessed with that story.
You are. That's because that's your, that's your happy place.
It is my happy place. All right, speaking of places, happy or other, the global cover story is about China and its second go-round as host to the Olympic Games in Beijing, and how really, Tim, this time around the world gets a very different China.
Joel Weber is editor at Bloomberg Business Week. He joins us on the Access line from Brooklyn. Joel, before we get into this story, I want to talk the cover here. I'm holding it up. I don't know if, you can see it on YouTube because Ari is amazing and already has the cover up. But it shows Xi Jinping in first place with the gold medal on the medal stand, the podium. Talk to us about how this cover came about.
Well, we have been looking ahead at the Olympics for a while, which obviously aren't underway yet, and soon I think everyone in the world will start talking about them. And so we had this observation, though, as we kind of marched toward opening ceremonies, that not so long ago, opening ceremonies were in the exact same stadium in Beijing. That was in 2008. That was the Summer Olympics. Obviously, this is the Winter Olympics. And other than that, almost everything about China and the world, China's role in the world seems to have changed really since that 2008 moment. So we wanted to, as this little walk-up, talk about all of those things that have changed and China's role in it, and that ascendancy that putting Xi on the gold medal pedestal really represents.
Well, and it's It is a very different China, and I love that this story, Joel, gets into specifically the role of China in our global economy. Where it was back in 2008 is very different from where it is today.
Yeah, keep in mind that back then, it was sort of like China was just really kind of coming to the world stage, and it was basically like getting crowned as a member of that community, and obviously. If you just even think about it from an economic standpoint, at that time in 2008, as John Liu and Janet Paskin write in the story, it had just passed Germany to become the world's third biggest economy. Now it is basically nipping at the heels of the U.S. And depending on how some of these next few years go, it could very well end up passing the U.S. even sooner than projected. And the catch here is for all the things that have happened in the U.S., and actually just bears mentioning, 2008, right after the games, that was basically when the financial crisis started to unfold. And I think one of the things that the story goes into is that China learned a lot from that financial crisis. Obviously, it affected China deeply, but they actually helped kind of mold their version of capitalism, which obviously is slightly different than the rest of the world's version of capitalism. But they basically looked at all of that and said, hey, we could do something better than the West has ever done.
Okay, so they have that one. Maybe we give that one potentially to them, Joel. But, when it comes to human rights issues, like that is still this difficult relationship that the world is having with China. Like, we want you to be part of the global economy. We want to be able to tap your market. We want to have these relationships. But we have a real problem when it comes to your human rights issues and abuses.
So that's going to be, I think, the big tension over the next few weeks as the Olympics start to get going. And during the Olympics, I think we'll probably see much discussion of this. Obviously, China wants to frame that differently and say, look, this isn't a human rights conversation even. You're trying to make it something different than what it is. And so I think we're just going to continue to hear more about that in the days and week ahead. But obviously, it's a sticking point and one of the reasons that the U.S. has taken the stance on the games that it is.
Well, we actually got a chance, Tim and myself, to catch up with Janet Paskin out of Hong Kong to talk about this story. And here's a little excerpt from that conversation where she talks about the future of China. Listen up, everybody.
It's hard to look beyond COVID, is the honest truth. Because when you look at how China has done in the last couple of years and really the growth in its economy and this amazing recovery that they've been able to affect during the pandemic while everybody else has been in the doldrums, a lot of that is due to this COVID zero policy that they've had, where they have zero tolerance for any infection. That's kept people going to work. It's kept factories running. It has really minimized disruption to the role that China plays as kind of the factory of the world. They are sticking with that policy, but it is getting harder for them to do that, and that could really affect their economy in a way that we haven't quite seen. So I think that this is going to be a critical year for China, for the Olympics, for the COVID zero policy, for its economy.
And that is Bloomberg senior editor Janet Paskin. Tim and I catching up with her earlier this week, Joel. But that's the one thing we didn't even talk about with you, like COVID, like their policy. Initially, we were all kind of, thought China was onto something, doing it right, and now it's questionable.
And we're going to see, with things like Omicron and like the just the high level of contagion that are possible with it. They had great success getting, vaccines out. Those vaccines, TBD, how they hold up against something like Omicron. Who knows really what that looks like with large swaths of the population. So we will again. It's a big question mark. They have successfully become basically the last place in the world that could put up a border and not let anybody across. And here comes the Olympics, where they're going to have to let some people across because they're hosting it. Now, the last thing I'll just mention here on the Olympics is one other big difference between 2008 and now is back in 2008, a lot of people wanted to hold the games. Almost no one wanted to hold this one. So this was really, China is left holding an Olympics that everyone else is kind of backed away from.
Hey, Joel, we only have 30 seconds left with you. I want to make a hard pivot here because there's so much good stuff in this current issue of Bloomberg Business Week. I have it in my hands. The social clubs in New York City that I've never been invited to, that I don't belong to. Am I going to see you at those?
Maybe after Omicron, I'm laying low for just a little bit longer. We had to go from extreme to high, and then I'm going to recirculate and be social again.
Okay, that of course is from our pursuit section in the magazine Bloomberg Business Week. Joel Weber is editor of Bloomberg Business Week. He joins us on the Access line from Brooklyn. Hey, check out this new issue of Bloomberg Business Week magazine. It's available on newsstands, on the Bloomberg, and at bloomberg.com/businessweek. Carol, we didn't talk about your happy place.
No, Anguilla. There's a story on that. There's also this amazing Ponzi scheme story that I feel like is going to come to a Netflix soon.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is Countdown to the Close. Just 60 minutes left in your trading session, in your trading week. It is Caroline Hyde, Romaine Bostick, and Taylor Riggs. Joined now by Tim Stenovic, of course, as we go cross-platform team, TV, radio, YouTube, to discuss an 11% fall from the beginning of the year on the Nasdaq, and of course the continued tumult across asset.
Yeah, serious volume and serious volatility today. Did you guys see this just before noon today? The Nasdaq 100 erasing all of its losses for the day, going into positive territory. And then, hey, we're at session lows again with the Nasdaq 100.
Yeah, I mean, look, we saw a lot of those program trades come in. We saw some of those big block trades come in here, but there's real no conviction here. And as you're speaking, Tim, and we're seeing everything hit now new lows of the day. The S&P 500 now below that 200-day moving average. The Nasdaq Composite now down more than 2%.
Look out below, 4,412 is where we are, 70 points lower. The, of course, all-important 200-day moving average was 4,427, I think you said it was, Romaine, so we're off. Yeah. Now down by 1.5%. The Dow feeling the pain, off by more than a percentage point. And the Nasdaq now 2.1% lower, 11.4% lower on the year. The Russell 2000 also off by more than a percentage point.
And just like that, year-to-date, energy is now the only sector in the green for the year. We, of course, pivot to where we are on a single-day basis, and it is very, very defensive. As you take a look at what is green on the screen, it's staples, real estate, and utilities. And what's interesting is this also comes remain as bond yields are falling for the third straight day. So that is something you would see. Materials, energy, financials, technology, of course, those are all off almost 2% on the day.
And I think we need to come back at some point and talk a little bit more about the reaction that we're seeing in the bond market, a huge flight to safety right now that we didn't necessarily see the last couple of days here. This is the dash away from, I guess, dare I say it, trash, at least in the minds of some folks here. You're seeing some of those high multiple names really come down to earth here. Netflix down 23% here on the day. MicroStrategy and basically everything tied right now to the crypto space is lower. MicroStrategy down 16% on the day. Marathon, Coinbase, all of those names also lower here. Intel, one of the few bright spots here, higher here on the day. In fact, some of the semiconductor names actually holding their own here, and they've been relatively resilient. Union Pacific, the railroad, also higher here on some earnings here. So this isn't all gloom and doom here, but right now it's really being driven by this drawdown we're seeing in some of those high multiple tech stocks.
You bring up MicroStrategy, I go straight to it. What is Bitcoin up to currently? Well, I'm feeling the pain. If you look across the board, we're seeing 38,000 handle on Bitcoin at the moment. Lowest price since August, declining some 18% since the start of January. But look how it moves in tandem as well with some of these other, well, I thought this was an uncorrelated play, but it's not. It moves with tech. It moves with the likes of the ARK ETF, which is down. And if you lay one on top of the other, they move very much in a symbiotic manner.
Well, speaking of Kathy Wood is somebody who says that
Isn't that the correlation? I mean, in seriousness, it's a risky asset, and at some point, people look at this environment and they say, I don't want to be exposed to risk, or at least not the extreme
It ain't digital
risk.
gold.
Right.
And
No, that is a very good point. The reason I bring up Kathy Wood, though, is because she's been outspoken about inflation recently, and she's actually said in recent months that she doesn't think that we're in a persistent inflationary environment. President Biden addressed this earlier in the day at a news conference talking about chips, praising Intel for plans to build a new semiconductor plant in Ohio, and blamed low chip supply as one of the factors driving inflation. Check it out.
Everything from cars to dishwashers are delayed getting to showrooms and customers, just as demand for them is up because the economy is growing. And because supply is low, we find ourselves in a position that we're really behind the curve. Prices are going up.
That, of course, was President Joe Biden at a news conference today, praising Intel for plans to build that new semiconductor plant in Ohio. I know the three of you, in just a little bit of time, are going to be speaking to Intel CEO Pat Gelsinger. Here's the thing, though. This is not going to start producing chips in the United States for years. And the inflation problem is one that is facing Americans right now.
Yeah, and this isn't going to solve it. And I mean, we'll get a word from Pat Gelsinger. But I mean, back to the point here about inflation and whether it's persistent. We've heard these comments, from Kathy Wood, from the president. We heard Janet Yellen also saying something similar here. The question, though, is where do we land? I mean, we're not going back to pre-pandemic inflation levels. I think that everyone is pretty much in agreement with that. Whether we go back to, say, I don't know, a 3% rate, or we camp out at like a 4 or 5% rate, that has material differences.
And even Caroline, if it does go back, as I think it was Yellen saying by the end of next year. Sure, that's fine, but the path to the end of next year could be long and painful. And I think people are thinking about the path and what that path looks like and the pain through that path, even if you can see a light at the end of the tunnel 2 years out.
It's all about the path of the Fed, isn't it? FOMC meeting next week, and everyone bracing for where they'll steer us. Will they hint that March is when we go? Will it be one hike? Will it be two hikes, as even some in the market are thinking?
Well, I want to bring it back to the sell-off that we've been seeing in recent days. If you think about the narrative, how it has shifted, and I believe this is from William Mary's Peter Atwater, who was talking about this. The narrative around the sell-off in recent weeks has certainly changed, right? A few weeks ago, it was about rising interest rates. Before that, it was about selling for tax purposes. Now, this is a little different. So I wonder what is priced in and what changes next week when we hear from the Fed.
Okay, were people really selling for tax purposes?
I don't know. That was the narrative. Look, you and I were co-anchoring at the end of 2021, right? Yeah. And that was certainly what some people said.
And I'm sure there were, like about 1,000 rich people who were actually doing that. But that really wasn't what was driving the market. I mean, in all seriousness. But we talk about what we hear on Wednesday at that FOMC, at the press conference, of course, with Jay Powell, Caroline, and then, of course, with the actual statement itself. How much of that roadmap are we going to get, and is it going to soothe the market?
Can he hold the hand of the market through this? Is the market trying to front run the Fed? I mean, Cameron Christ putting these writings out, Taylor, about maybe trying to sort of sap out all the liquidity that maybe the Fed was already trying to do, and this is what you see, this sort of bout of volatility. We'll have to see how Jay Powell manages to look through it.
Only two quick points here. Sebastian Gailey over at Nordea, Caroline, I know that you read his research just as much as I do, says the Fed will be a little bit more careful in QT than they were last time because they understand that there is so much more leverage in this system this time around. The balance sheet is that much bigger. But Romaine, I know you're rolling your eyes at me. Credit spreads haven't moved. And if that is where the fears talk about contagion, you're at 100 basis points over treasuries on investment grade. High yield isn't budged.
Okay, yeah, and we should point out too, I mean, this is still, some of the sell-off we've seen this week is earnings driven as well. We get something like 100 companies in the S&P 500 reporting next week, including Apple and Tesla and Microsoft. A lot of names that could actually help turn this market around if they surprise to the upside.
Was Netflix a canary in a coal mine, though? I know we're talking about different companies here, but was it a canary in the coal mine?
Well, we're going to find out pretty soon, aren't we?
Yeah, we will. Hey, we'll also see you guys pretty soon. That is going to do it, though, now for our cross-platform coverage. We'll be back together again on live TV and radio and YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic. Tim, you guys do cross-platform market coverage, and I go and get some more cookies. That's what happens when you work from home.
You know what was great about working from home?
What?
Is you can spend the time that you're not commuting baking cookies for colleagues.
I'm sorry. I think there's static on the line. I didn't hear you.
Did I cut out? I cut out. I think it cut out. Yeah.
Anyway, in the tunnel, I can't hear you.
You know, I have heard. I've worked here since October of 2020. I've heard about these world famous Carol Masser cookies.
It's a family tradition. We usually bake around the holidays, and it's been tricky the last couple of years about do you bring in food, do you not? I used to bake with my sisters who have now are living all over the country.
You've been blaming the supply chain for not bringing them in, right?
It's a supply chain. I did try to buy vanilla. I went to look to buy some vanilla, and it was like $50 or $60 for. Wow. It wasn't a small bottle, but it wasn't a big bottle either. That's crazy.
I'm getting some great commentary from our producer Paul Brennan, who, by the way, did throw me that supply chain joke. So thank you for that, Paul. I'm not going to repeat the other stuff. I'm just kidding.
He's had the cookies.
I know. He's one of the people who's told me that they're amazing.
We'll get there. We'll get there.
We will get there. Hey, we are going to hear from Intel CEO Pat Gelsinger in the next hour when our Bloomberg TV team interviews him about that investment in Ohio. Again, that plant not up and running and creating chips, though, for a couple of years, Carol.
No, but it's a big, bold move. It's got to get the attention of investors who are like, do something, because Intel, which has been the dominant player, we know is facing some big challenges. Our Ian King writes about it all the time, and it's a different world. The thing is, everything, it feels like, in our world needs chips of some sort. So Intel stands to continue to benefit going forward if they make the right investments.
Okay, one of my friends who I was recently with, he's looking to buy a new car, a plug-in hybrid. He can't find anything for below $5,000 over sticker.
Really?
Right yeah, that's the demand.
It is definitely a seller's market on so many different levels. All right, more to come. We'll hear from the Intel CEO. In the meantime, let's get back to World of National News. Over to Nancy Lyons. Hey, Nance.
Hey, Carol. Secretary of State Antony Blinken says during a 90-minute meeting in Geneva, he once again promised Russian Foreign Minister Sergei Lavrov there will be a swift, severe, united response to any incursion into Ukraine. Bloomberg's Irv Chapman has more.
Lavrov again denied any intention to invade Ukraine. Blinken's reaction?
If Russia wants to begin to convince the world that it has no aggressive intent toward Ukraine, a very good place to start would be by removing its forces from Ukraine's borders. That would give Russia the capacity, if President Putin so chooses, to attack Ukraine from the south, from the east, from the north.
Blinken and Lavrov agreed to meet soon again with written responses to each side's proposals regarding security in Europe. In Washington, Irv Chapman, Bloomberg Radio.
Encouraging new data on the effectiveness of booster shots during the Omicron-driven surge in coronavirus cases. The head of the CDC, Dr. Rochelle Walensky, details the findings.
Following a third shot, vaccine effectiveness increased up to 94%, even higher than it was in the first 6 months after vaccination.
Walensky is also cautiously optimistic the Omicron wave is easing with a drop in cases in some parts of the country. Also today, a Texas judge put the administration's vaccine mandate for federal workers on hold. Two entertainment icons are dead, passing just hours after one another. Bat Out of Hell singer Meat Loaf died last night, with TMZ reporting he'd contracted COVID-19. And comedian and actor Louis Anderson died this morning at the age of 68 following a battle with blood cancer. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic, right here on Bloomberg Business Week. We're going to talk a little bit about crypto and a platform that actually helps you access crypto, buy it through your IRA. We'll get to that in just a moment. In the meantime, New York City Mayor Eric Adams, his first paycheck.
I'm so glad that our team followed up on this and that our team has covered this so closely, because Eric Adams made waves, gosh, a couple months ago, it seems like at this point, when he said he wanted to make New York City a crypto-centric city, or crypto-central to the city, I should say. I'm paraphrasing him there, Carol. I think you should note. But he did say he would take his first couple of paychecks in crypto, and guess what? He did.
It's great.
Even though the price has gone down a lot, which maybe is a good thing for him taking his paycheck in crypto. I don't know.
Is it?
I don't know. Yeah, if it goes, if it shoots up in value soon.
Oh, right. He could, right.
But look, I have no crystal ball.
But if it goes down.
Bye-bye.
So he gets his first paycheck today. As you said, he gets his paycheck. It's going to be converted into Bitcoin and Ethereum. Coinbase Global, the largest U.S. cryptocurrency exchange, they're going to be handling the conversion through its direct deposit feature, which allows eligible users to automatically transfer a portion or the entirety of their paycheck into a crypto wallet.
There it is. Remember,
it's pretty cool.
It was back in, it is pretty cool. It was back in November that he actually vowed he would take his first 3 paychecks in Bitcoin and welcome the development of an NYC coin similar to Miami's as a way to make New York a more crypto-friendly city. The mayor's office, though, declining to say how long Adams planned to hold the cryptocurrencies, confirmed his gross paycheck of $9,924.66 would be deposited into that Coinbase account.
Is that biweekly?
I was just wondering that.
Right?
Yeah, not bad.
Is that the first 2 weeks? I guess so.
So does that mean nothing? I guess nothing went into his 401k or pension plan?
I don't know.
I guess the city doesn't have a
Eric,
traditional 401k.
Call us. We have a lot of questions. Okay. The other thing is he didn't say how long he's going to, or how quickly he might sell, right, the crypto.
Yeah, he didn't. A lot of details still I want to hear.
Eric, Mayor Adams.
Yeah.
We're here.
We're here. Come talk crypto with us.
Call in. All right, you're listening to Bloomberg Business Week. We're going to get our weekly check. A little bit more on crypto in just a moment.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Bitcoin just taking out 37,993 right now on Bitcoin, tumbling by 8%. Down day across the board. Lots going on. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are sinking again today, helped by that plunge in Netflix. Dow's currently down 328 points. S&P's dropped 66, while the Nasdaq is lower by 300. Note the S&P 500 is now trading below the 200-day. The U.S. 10-year yield at 1.74. Gold is down 10. The FANG stocks are down 5.3%. And you mentioned Bitcoin. The U.S. SEC rejected MicroStrategy's Bitcoin accounting strategy. Among the main 11 S&P sectors, only consumer staples were in the green. Telecom and consumer discretionary were under pressure. And leaders to the upside in the Dow, McDonald's and Nike, while Disney and Boeing led to the downside. After earnings regarding Netflix, it fell as much as 25%. And in other news, the U.S. is weighing evacuating diplomats' family members from the Ukraine. Wrapping things up, Amazon fell 6% to a 52-week low. Live from the First Word breaking news desk, I'm Bill Maloney.
Okay, we thank you very much, Bill. Lots going on, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much for the update. We just talked about, for some of our audience, about New York City Mayor Eric Adams confirming his first paycheck, which he gets today, will be converted into Bitcoin and Ethereum. And then we got that news earlier this week, Tim, about the Fed taking a big step toward the possible issuance of a U.S. digital currency. There's a lot going on.
There certainly is. For some updates on crypto and some analysis, let's bring in Todd Southwick, CEO of iTrust Capital. Todd joins us on the phone from Long Beach. iTrust Capital is a platform that allows people to buy and sell crypto through their IRAs. Todd, how are you?
I'm good. How's everybody? And thank you for having me on the show.
Hey, well, thanks so much for joining us. Eager to talk to you about this. I want to talk about iTrust Capital in just a moment, but I want to get your thoughts on what Carol mentioned. I wonder about legitimization here, because that's a term that we've heard a lot in the past couple of years when it comes to cryptocurrency, and certainly it's important for your business and your product. I'm wondering what it means to have the U.S. at a federal level talking about a digital coin, while at the same time you hear someone like Eric Adams, New York City's mayor, taking his paycheck in crypto. Just give us your thoughts on that.
I think there's a lot of people talking about crypto, and I think that's kind of the main takeaway. A lot of people compare this to the internet in the 90s. I think that's a great comparison because people don't know where it's going to be. So that would be my overall commentary on governments talking about going into cryptocurrencies and issuing cryptocurrencies, is that there's a lot of talk and there's not a lot of certainty. As we see from our side, we are working a regulated business. And the SEC is not giving much guidance. And again, I believe it's a lot of talk that just hasn't shaken out yet.
Okay, so how does the talk then turn into action? And do you think it actually does? I mean, look, Eric Adams, Mayor Adams, taking his paycheck in crypto, that's not talk, right? He's actually taking crypto.
It's true. I mean, we know that the SEC and the state regulators are taking the position now that they are going to move into regulation. So it's top of the lawmakers' minds. My point was just that difficult to predict where it's going to go. I don't think we'll be seeing digital currencies replacing dollars any time in the next 5 years.
Well, having said that, so let's get into what you guys are doing. Todd, talk to us a little bit about your platform, because as Tim mentioned at the introduction, that you guys, through that platform, clients can directly buy and trade crypto, also gold, from what I understand, in real time, and do it through their retirement accounts. Tell us a little bit about how this works, and also the volume and activity that you're seeing and the growth on your platform.
I mean, we're an interesting story in that, when we started the business in 2019, crypto was not something people are talking about. Mid-pandemic in 2020, we saw the shift where a new type of customer was coming in. I think I saw some statistic recently that in 2019, the survey said that 1% of the U.S. population is interested in investing in crypto, and we're now up to 14%. So I see, we saw that shift in 2020. and our business, grew along with that. And the type of client that's coming in is different as well. We're shifting from people who are enthusiasts that that are smaller in numbers, obviously, to the broader market retail investor. And that's where we've been successful with our platform. That we've taken the position that we're an investment platform, and the client we target is the retail investor who wants to make investments in cryptocurrency but doesn't want the headache or the fear of loss with custody. So with us having an all-in-one platform with institutional custody and allowing people to use IRA funds to do so in a tax-advantaged way, we've really been able to attract that new audience coming into crypto investing.
Hey, I wonder about who should be investing their retirement in crypto, and like how people should think about it. Because traditionally people think about their retirements in fixed income and equities. And I'm wondering, based on your research and what you're telling people, how much of that do you believe should be in crypto? And look, I know it depends on age. That's a big part of it.
I mean, it does depend on age, but our perspective as a company, and from myself personally, is that we do not give investment advice. We provide maximum options to our clients, and they make the decisions on their positions and how much of their retirement portfolio to put in these accounts. There's plenty of independent analysis on how much cryptocurrency one should hold to be diversified. I think I've seen numbers like 5%. Obviously, people on our platform are investing at greater proportions because we're a cryptocurrency specialist platform.
Okay. So talk to us a little bit about the other side of the business, right? Getting actual companies to sign up for this, because it's a business that relies on, and we only have about 30 seconds left. Can you talk a little bit about how interest has shifted over the last couple of years as we've seen the price upswings in crypto?
Yeah, absolutely. I mean, when there's periods of volatility, you see a lot of entry into the market, and when there's downward movement in prices, there's less interest in the market. So we see higher percentage of signups, and a much higher transaction activity that follows volatility.
All right. Well, good to check in with you and hear about what you guys are doing specifically. Todd, thank you. Todd Southwick. He is CEO at iTrust Capital, on the phone from Long Beach, California. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week, and we've just got about 29 minutes left to go in today's trading session, getting ready to wrap up the trading week. We're going to get technical on the Dow with Kriti Gupta.
Yeah, we're going to talk about moving averages for her chart of the day. We're also going to talk about the story that she's got her eye on when it has to do with international relations. In the meantime, as we do get closer to the end of this trading day, Charlie Pellet is here with the details of what's going on. Hey,
What a day. Well, what a day. And we'll let Kriti perhaps explain what's going on today with those technical levels. The Dow, the S&P, Nasdaq, right now, I can tell you the numbers. They are looking ugly for the bulls. Right to the numbers. We'll give you the why in a moment here. Tech leading the way lower with Nasdaq down 326 now, drop of 2.3%. For the month of January, Nasdaq is down 11.5%. Nasdaq 100 index down now by 2.4%. S&P tumbling 73 points. Speaking of those technicals, they're down 1.6%. We have got the Dow lower by almost 400 points right now. These losses are intensifying. 28 minutes to go. The Dow down by 1.2%. 10-year yield 1.74%. Stocks extending losses in the last hour of a volatile week of trading. Shaky corporate earnings and prospects for higher interest rates fueling those market jitters. For example, among the earnings, Netflix plunging now by 22.9%. Gold down 0.5. Cannot ignore Bitcoin dropping now by 8%. 38,019 on Bitcoin, was trading below 38,000 a few minutes ago. Crude down 1.2%, 84.50 a barrel. So how is the Omicron variant affecting case counts? Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
So are we going to plateau at a level that's low, say pre-Delta, or are we going to plateau at a level that's high because we still have a large number of people who are unvaccinated? And on top of that, it's also shown now that the boosters are helping prevent infection as well, too. So we're not just talking about vaccinated, we're talking about people who have to be vaccinated and boosted to really get the maximum protection against Omicron.
Dr. Andrew Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Vaccine stocks all lower. Pfizer tumbling 2.4%. Its German partner BioNTech, its ADRs down 5.6%. AstraZeneca down 1.8%. Moderna's down 4.3%. J&J Johnson & Johnson down 0.3%. And that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it is just after 3:30 on Wall Street, and as we do each and every day, we turn to Kriti Gupta, Bloomberg Markets correspondent for Bloomberg News, for her chart of the day. She joins us on the phone from New York City. Kriti, explain. So you're doing technical analysis on the Dow today. You start out your chart of the day explaining that technical analysis, when you use the Dow, it can be controversial. I didn't know this. Why?
Well, using the Dow in general is pretty controversial.
I know.
Using technicals on top of it.
Yeah, I get such a hard time when I talk about the Dow. Romain does not like it. He pushes back hard.
Most investment professionals don't, but they don't because the Dow has changed so much since it was invented. Fun fact, the Dow Transport Index was actually first invented. This was like back in the 1800s, back before the 1920 crash. You really did see the Dow be representative of kind of American industrialism. So steel companies, railroads, things like that. Over time, you've seen the Dow kind of transform to have things like Apple, Microsoft, Salesforce in it. But it's not the key 30 companies that are driving the economy anymore the way it was, when it was first invented. It was the top 12 companies that were driving the U.S. economy. So that's why it's a little bit controversial to use as a gauge versus something like the S&P 500. And technicals are pretty controversial, too. Not everyone uses them. But I decided to rebel against everyone and do both on the same day.
Does Tom Key know about this? I just want to know. Does Tom Key know about this one?
He does not. We didn't do the surveillance hit this morning, and I took full advantage, Carol.
Okay, I was just going to say, I bet you're going to be hearing from him next week, if not over the weekend, okay?
I'm sure I'll get an angry...
Tom's at the Carlisle having a cocktail, an afternoon cocktail, I'm thinking. So he's not listening, maybe.
All
right, anyway.
We're going undetected. undetected here. But the reason I did it, and I think this is really important, is because sure, these aren't the 30 companies that are perhaps driving the economy anymore, but they are still 30 companies that really matter. United Health, Boeing, Honeywell, Apple, Microsoft, Salesforce, these are all companies that do have a lot to do with the direction. And lately, you've seen a lot of kind of divergences between the S&P 500 and the Dow. And a lot of that is because as people say, well, is the value trade back? They tend to go to large cap cyclicals. And where are most of the large cap cyclicals concentrated? It's in the Dow, because you aren't seeing that tech heavyweight as aggressively in the Dow as you are in the Nasdaq or the S&P 500. So for me, that's kind of why I want to look at, compare it to its 200-day moving average. And I found that's kind of a basis of support. Every time the Dow drops below its 200-day moving average, going back to 2018, it kind of is met with some buyers. The only exceptions are going to be in the fall of 2018 and, of course, the 2020 crash. And a lot of that has to do with the Fed. So you haven't actually tested this level until back in 2019, pre-pandemic, until really November. And then for the first time today as well, in both times, today and November, you actually were met with some buyers. So as we talk about whether the value trade will actually take hold, this is going to be a metric to watch.
Well, and it's interesting. I got to say, maybe because I grew up in, business news and, still respected the Dow. But I get it. But I also feel like it's a simple index and, you really see, all the players right away. And I do think in some ways it is still a good indicator in terms of the markets. And it's doing a little bit better than what the S&P is down this year, but it does closely track the S&P, right? So it's not like it's way off in terms of what the market's doing.
Right, exactly. And to your point, the reason it does that is because of two names in particular, and that, of course, is Apple and Microsoft. But what I love about the Dow is one of the heavyweights is Boeing, which is far more exposed to what governments are doing, what the economy is doing, what travel is doing. So for me, I always keep one eye on the Dow secretly, so I don't get in trouble with Tom Keene. But this is something, like I said, to watch.
I'm with you. Go Dow. We can just be on it together. So what else is on your radar today?
Yeah, well, I think the story this morning is going to be in foreign policy in particular. We're hearing Russia and the U.S. have these conversations about whether or not an invasion in Ukraine is actually going to take place. You had the foreign minister of Russia come out and say, well, we're not planning a direct attack, whereas Secretary Blinken come out and say, well, there's other ways that Russia attacks, not necessarily a military incursion. So our very own Alberto Nardelli and Nick Wadhams over on our D.C. bureau, well, they came out with a story saying that the U.S. is weighing pulling diplomats, family members out of Ukraine. This is very significant because it helps you gauge just how seriously the administration is taking a physical threat to Ukraine as opposed to a cyber attack. So this is going to be another thing to watch going into next week.
Yeah, it was certainly interesting seeing that the press conference from the president on Wednesday. This was the big news out of the press conference. Hey, Kriti Gupta, Bloomberg Markets correspondent for Bloomberg News, joining us on the phone from New York City. Have a great weekend. You can follow her on Twitter at Kriti Gupta News to get her chart of the day. Let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. The U.S. and Russia are trying to avert another conflict in Europe, but their top diplomats warn no breakthrough is imminent as fears rise Moscow is planning to invade Ukraine. Bloomberg's Amy Morris has more from Washington.
The meeting between Secretary of State Antony Blinken and Russian Foreign Minister Sergei Lavrov lasted 90 minutes.
It's very clear, and I made that clear again today to Minister Lavrov, that any renewed aggression will face massive consequences.
Blinken agreed to provide written responses to Russian demands and meet again. Lavrov dismissed Western hysteria over Ukraine. While the meeting bought some time to pursue diplomacy, the situation remains so tense, the U.S. may evacuate diplomats' families from Ukraine. Non-essential staff would be able to leave voluntarily. Family members would be ordered to return home. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden is celebrating a deal meant to boost production of semiconductors as chip shortages are blamed for rising prices. The president says Intel's announcement it will build a $20 billion factory in Ohio will create thousands of jobs.
This is a truly historic investment in America and American workers.
Biden says he wants to see more cities and states announcing investments in chip making. We'll have an interview with Intel's CEO coming up after the bell on Bloomberg Radio and Television. A federal judge in Texas has put a halt to President Biden's vaccine mandate for federal workers. Judge Jeffrey Brown says it's not about whether individuals should be vaccinated, but whether the president has the power to require millions of federal employees to undergo what he called a medical procedure as a condition of employment. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Tim Stanovic, Carol Masser. We are Bloomberg Business Week on Bloomberg Radio. This story, Tim, is the most read on the Bloomberg in the past 8 hours.
It was so funny.
Shocking, right?
I know. I was talking to some colleagues because we saw this headline come out, and then minutes later I get this email. I mean, seconds later, I think, that there's a read spike. So what that means in the Bloomberg terminal parlance is that when a ton of people are reading a story, I signed up for a setting where you can actually get the story. And I was making some commentary to my Quick Take colleagues who all saw the same thing happen because they have the same setting. Whenever there's a story about executive pay, it is among the most read, and Sri Natarajan certainly delivers here. An exclusive from Sri, Goldman dangles new bonuses for select few on top of surging pay. It's planning yet another way to juice pay for its top brass as special rewards pile up after a bumper year.
And this is for about 30 of the most senior bankers that classify for those top brass, if you will, or part of that club. For those 30 or so, there's a different, more lucrative perk coming in, what's emerging as the Wall Street Titans' most generous year in more than a decade. The new equity awards will be doled out to members of Goldman's management committee, its top decision-making body, according to people with knowledge of the plan. The package is designed to really cajole execs to stick around longer by putting them in line to unlock millions of dollars if the bank stock hits certain targets.
If the bank stock hits certain targets, that's according to people familiar with the situation. A spokesperson for Goldman declined to comment on the new rewards. The new grants would be offered in place of the one-time guaranteed stock award that's been presented to other partners, one of the people said. It would be structured similar to the incentive awards that were announced back in October for CEO David Solomon and his deputy John Waldron, who are not included in this latest round of grants.
So it's interesting, though, we're seeing this just kind of feeding frenzy around Wall Street among the big banks in terms of compensation. It's like one rises, the next one does, and just to hold on to workers.
But hey, that's hitting the bottom line because since the company posted annual results earlier this week, Carol, the stock has dropped almost 9%. That was this morning, with investors focusing on a 33% jump in personnel expenses.
That's a big bump.
Yeah.
All right, this is our most read story on the Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day slump. The Dow, the S&P, Nasdaq are all lower, on track for a losing week. For the week, the S&P 500 index showing a loss of 5.3%. Keep in mind, there are only 4 trading days this holiday-shortened week. S&P right now down 68 points, down 1.5%. Dow Jones Industrial Average down 343, drop there of 1%. Nasdaq lower by 309, down 2.2%. 10 years up 14.30 seconds, 10-year yield 1.75%. Stocks are extending losses in the last hour of a volatile week of trading. Shaky company earnings and prospects for higher interest rates are fueling today's market jitters. As for earnings, Netflix is plunging 23% today, down 23.1% after last night's earnings report. Another closely watched stock today is Peloton. Its shares rallying by 13.3%. Again, 10-year yield 1.75%. Gold down 0.5, 18.29 the ounce. And West Texas Intermediate crude down 0.9%, 84.77 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
The walls are closing in on UK Prime Minister Boris Johnson. His critics, including fellow Tories, are furious over the Partygate scandal involving lockdown-defying gatherings held at 10 Downing Street. If Conservative members of Parliament were to trigger a leadership contest, Johnson could very well lose. The Prime Minister is playing for time, apparently hoping that passions will cool. But the political environment has shifted since Johnson's election victory in 2019, and not to his advantage. Brexit's promised benefits are invisible, and its mounting burdens impossible to ignore. The pandemic is once more threatening to overwhelm the National Health Service. Energy costs are surging, tax increases are on the horizon, and the Labour opposition is no longer led by a socialist. Strange things happen in politics, especially British politics. But if Johnson prevails against these forces, it will be a miracle. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 10.5 minutes left to wrap up the Friday trading session, wrap up another difficult week. Certainly, if you were trying to be bullish in this market, it wasn't that kind of trade for you for the most part. Let's get to it with Alan Lance back with us, research director at lanceglobal.com, president of Allen B. Lance and Associates. He is back with us on the phone from Toledo, Ohio. Alan, how's it going?
Going well. How are you?
Doing okay. Trying to figure out, watching technicals on some of these major equity averages. How significant is it to you that we see an official more than 10% or 10% correction when it comes to the Nasdaq?
I think it's as far as really something that was overdue. We're seeing more and more excesses, and it's a situation where I think it's actually a positive for the long-term health of the market. If we continued, with the IPO and momentum craze of 2021, I think we'd have been heading ourselves up for another, 2000, with the .coms, et cetera. I mean, the valuations are better, but we're just getting to that extreme. So this is something that, I think is healthy for the market. It's well needed, and just like in the past, you find out that these pendulums swing to an excessive degree. So we might see more of this, which I think is good. If you have cash, it's a good time to start redeploying the profit taking from the past quarter and utilize that cash to pick up some good bargains.
I mean, it's always hard to catch a falling knife, Alan. But when do you know that we've hit bottom? What are you looking for?
Yeah, that's the hardest thing, Tim. It's a situation where, in 2000, we bought way too early as far as in the financial crisis. We started buying in end of November 2008, and we're still buying in January, February when the market was still going down. What you have to do is really get to a point where you're comfortable with the valuations. We weren't a quarter ago, but now we're starting to get comfortable and buying. And what we're telling our clients is that it's a situation where you want to buy and it'll probably go lower. We're not going to pick a bottom. We're not that smart, but I think 2-3 years from now, these prices that we're buying, just like when we were buying in January of 2009, will really look good, and that's the theme of taking advantage of the volatility. And if you don't have cash or you're in taking that extreme risk, I think it's a situation where then it's some hard decisions. But if you've got the cash, now's a great time to gradually start going in. I still think we've got further to go. There's a lot of headwinds for 2022.
Well, and we want to get into where you think we should be deploying that cash that you might have on hand. But I have to say, and I respect him so much, but is it really a falling knife that we're seeing? And I think about a conversation we had with Ben Kirby yesterday at Thornburg Investment Management, who talks about, yes, we've seen a run-up in some names. Not every name in the market, not all areas of the market have gotten overbought, though.
Oh, definitely. And there's those momentum stocks, and I think the last Paven was a mega, cap tech, and now you're starting to see them, crater, and I think that's what's really, lost some of the faith into the market, and you got a lot of new investors in that haven't seen something like this, so that combination with the momentum.
But Alan, my point is that, yes, there's some names that are just off the charts and they've had such a tremendous run, but there's a lot of names that haven't. And so I just wonder, as we see the major averages going down on some of those, really impacted by some of those high flyers, I mean, how do you see the market more broadly? It sounds like you see it rather constructively, as you said, because if you've got money, it's time to really deploy some of that.
Exactly. If you look at the value, you do have some extremes, like I think Procter & Gamble is fully valued, but you look at a Unilever or even a 3M trading where it was, 4 or 5 years ago, even though their fundamentals have definitely improved. I think, take advantage of the broader sell-off and accumulating some value. Obviously, energy has been a good example of what can happen in a market. Energy underperformed for 10 years, so now you've had a year and a half of outperformance, and that can continue for a while. So you're right, Carol. There are pockets of opportunity as opposed to the financial crisis. Internationals, everything was overvalued, and it was really hard to find a place to hide. And now there are pockets, and eventually the growth names, if they go down enough, which some of them have, can start to look attractive on a long-term basis.
We hear from the Federal Reserve next week, and I'm wondering, Alan, how you're thinking about the Fed and its first meeting of the year, hearing from Jay Powell in the press conference, expectations, are you trading around it? How should our audience be thinking about it?
Yeah, I think that's just one of the headwinds, Tim. That and the inflation, and even geopolitically. You look at this, and we hadn't had the pullback. The market is, at extremes in many areas, and then when you have the headwinds of higher interest rates, higher inflation, it's going to be challenging after 3 great years, and I think it's just a matter of what we're doing is on the bond front, to try to avoid, try to own real assets, avoid long-term bonds. I think the yields are paltry, and the loss of principal is significant, and you want just the opposite in the investment. You want low risk and high returns, not the other way around. So there's a lot of investors that are taking excess risk,
right,
not only in the stock market but also in the bond market, that they don't understand, and I think that has to hit a head yet before you really see a bottom like we were talking about earlier.
All right. Well, certainly interesting in terms of your outlook there, and really appreciate you finding some time for us once again. Alan, be well. Have a great weekend. Alan Lance, He's research director over at LanceGlobal.com, president of Allen B. Lance and Associates, with us on the phone from Toledo. And, you know, Tim, we're counting down here, but it has been quite a week for the equity markets and quite a day, once again, where we've seen a lot of volatility. And I think there was roughly about a 2% or so swing on the Nasdaq alone. So you really just see a lot of movement. But right now, as we head into the close, we've got those major equity averages. They are down across the board.
Yeah, they certainly are. We're not quite at our session lows, but the Nasdaq down close to 2.5%, the S&P down 1.7%, and the Dow down 1.1%. Coming up next, it's our countdown to the close with our friends at Bloomberg TV. Our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. Tune in. This is Bloomberg Radio, and this is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Boston, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined right now by Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences in a wild, wild week. A short week, believe it or not, if you can believe it. Only 4 days here, but a lot of damage done here, Tim. We have pretty much correction territory, 10% correction territory right now for the S&P and, of course, for the Nasdaq, I should say, and the Nasdaq composite.
Hey, yeah, a lot of attention has been focused this week on the Nasdaq and the Nasdaq composite, and we've also talked a lot about big bank earnings. So I want to draw your attention to the KBW bank index, because after a record start to the year, it's down now just in the last 4 days, almost 10%.
This has been the longest, shortest week I remember in a very long time. But what's been interesting is the bond yield move throughout that as well, because actually the whole tumult started, the stock sell-off in terms of tech, was because yields suddenly were spiking higher. Actually, in the last few days, they've been tugging lower, but that hasn't changed the direction of travel for tech.
And what's so interesting is Jeremy Grantham that highlighted that, right, Caroline, that it started with tech and then it started to spill over into the Russell 2000, and it was yields higher. And that really has been the long-term story, despite the last 2 or 3 days really coming in and repricing. But I think relative to where we have been in the last year, it really is a 2-year yield remain that's still at 1%, though you would note a Russell 2000 that's now off about 18.5%. Wow. So if we think about some of these bear market territories and the fact that that's down because yields aren't climbing, at least for this week, Romaine.
Yeah, and and obviously next week is going to be a big week as we maybe potentially get some clarity out of the Fed, and of course we get more earnings here. Here, your closing bell. The Dow Jones Industrial Average down about 1.2% here on the day, going to finish the week down about 4.5%. And we talk about these max drawdowns, something we're going to be talking about a lot here. The Dow right now down about 7% here from its all-time high. Let's go to the S&P 500, down 2% here on the day, and right now that's going to bring the drop from that January 3rd high to 8.3% here. So pretty significant drawdown for the S&P 500. The Russell, which of course has been in correction territory going back to early December, down 1.8% here on the day, finishing the week down roughly by 8%. All right, let's take a look at the Nasdaq, because this is what we're all talking about here. Both the Nasdaq 100 and the Nasdaq Composite in correction territory, down 10%. They're going to finish the day, each of those indices down by about 2.7% here. This is a drop of about 7.5% just on this week alone, guys. So this is a pretty massive. We can talk all about whether 10% is a marker, whether we should pay attention to that, but we haven't seen these types of moves basically since the depths of the pandemic, at the start of the pandemic in March 2020.
Yeah, you make a really good point. On the Nasdaq 100, Romaine, you're basically taking a time machine back to June 25th, 2021. That's the last time we saw the Nasdaq 100 at these levels. We just spoke to Alan Lance over at Lance Global. He said that this is a healthy thing. It's if you have cash, it's a good time to start putting it back in slowly. He wouldn't call a bottom, of course, but, he said this is a healthy thing.
Yeah, indeed, Tim. Sorry, I'm watching us change up the board here because you're getting a little bit of some settlement and some action here. And really unbelievable, Tim, as you think about where we are for the day. There are only 2 sectors in the green. As Romaine was pointing out earlier, it might not be good. I think it's Procter & Gamble and Clorox that's leading the home products sector. That's only up about 0.3%. Pretty much everything else, it is all red on the screen. If you come all the way down, how much of this is sort of a rotation out of that reflationary trade, out of energy energy, out of financials, out of banks, and really out of technology. Software and services off 2.5% on the day. Media, entertainment, you're off 4.3% on the day. Tim, autos and components, you're now off 4.8% on the day alone.
Well, I was able to manage to find some stocks that did move higher today. Peloton, it rallied today after John Foley, the CEO, vowed to slash expenses. Peloton closed down 24% yesterday, down more than 83% from the highs of just last January. Xilinx also finishing the day higher by more than 1.1% off of session highs. It did jump as much as 5.5% earlier. Investors got a little hopeful that the company would gain antitrust clearance and sell itself to AMD. Romaine, I know that's a story that you followed closely, but this is after China's antitrust agency okayed a different transaction. Netflix, we've been covering this for the last 24 hours, finished the day down by more than 21%. And Intuitive Surgical, the company reported earnings yesterday. They make the Da Vinci surgical robot.
And we should point out, Netflix is down more than 40% from its all-time high. And you talk about Amazon now closing down 20% from its all-time high. Meta Platforms down 20% from its all-time high. Apple now down 11% from its all-time high. So you have a lot of these heavyweight names now that are in that either correction territory, even bear market territory, whatever you want to call it. It's a lot lower than where they were. And the question is, what sort of takes us to that next step, Caroline?
The next step is, well, potentially the direction of travel. When it comes to cross-asset moves, the fear gauges that we're seeing, I want to shine a light on that. As we're worrying about where big tech goes, as we're worrying about where some of these earnings point, we're currently looking at an FX market that's nervous. Are they nervous about geopolitical tensions remaining? We've still got Ukraine and Russia to be digesting at the moment. That perhaps is what's driving commodities. We see the fact that the Canadian dollar, the New Zealand dollar, the Aussie dollar, all those commodity-related FX pairs that did so well over the last few days are now on the downside as commodities drop for the first time in a few. Money moves into the Swiss franc, into the Japanese yen. We're up 0.4% on the Japanese yen for our radio audience. Swiss franc up 0.5% against the US dollar as we see that haven trade come clear front and center in terms of FX, move to commodities, and that's where you do see WTI crude off by 0.8%. Look, we're still at $84. It's still elevated, but some of them, it's sort of euphoria in commodities just coming out, sapped out a little bit as we worry about the growth trajectory, worry about the Fed. We worry about Brent crude currently off 0.6%, $87.80. We look at, though, natural gas, again, a sign of the geopolitical tensions getting pushed up higher. We're at 4% higher in the US. We're worried in Europe about the gas prices, about what Ukraine, Russia means for that, the tensions there. So that was sort of a geopolitical hazard that sort of affected the markets here. But overall, we're also seeing this flight to safety in bonds. German yields, 2-year, down almost 4 basis points. This in Sweden, in Denmark, in Netherlands, in Canada, in the UK, yields all lower. Money moves into the haven that is, well, sovereign debt.
Certainly on the day, Caroline, within full faith and credit, you see the safety and the safe haven that is in play today. But if I told you on the week that we were actually still higher in yields on the front end, on the 2-year yield, you may not believe me. We are still higher on the week by 3 basis points. We're at 1% on the 2-year yield. That really, and I could go on, we're lower on the week as we go further out. But it is a 2-year yield that, considering everything that we've been through this week, still higher, really kicks us off, Tim, into how we're thinking about a Federal Reserve on Wednesday, how the markets are seeking some clarity about a QT, about a liftoff, and really the path forward, at least for the next year or two.
Yeah, what's the clarity that we're going to get? And I do wonder, too, what's more of a catalyst one way or another? Is it earnings and what we hear from companies the same way that we heard from Netflix yesterday, and that's spurring some sort of concern about high-flying companies? Or is it what we hear from the Federal Reserve, or is that already priced in?
No, I think it's going to be both here, and I think the Fed could obviously do a lot of damage depending on what it says, on what they say, and we know that Powell has always been relatively sensitive to market movement, so we know he'll address it or at least definitely be asked about it.
But not part of the dual mandate.
Well, I don't know. Depends.
Right.
Well, he said only to the effect then that it starts to impact consumer confidence within corporations, right? So we're not concerned about a 10 or 20% drawbit down, but if corporations start hinting that it's hurting confidence.
If it's hurting your 401k, it might start hurting, the person on the street. But I think at the moment, this is more of a what about asset prices coming back to a realization that, yes, yields will move higher. And there's a certain point that the Federal Reserve has to tackle inflation. How much of a read on inflation are we going to get from some of these earnings statements?
I was just going to say that, Caroline, because we're talking about inflation numbers that we haven't seen in 4 decades. So the Fed is weighing that, and that is part of the Fed's dual mandate. And the employment picture, we know how the Fed feels about the employment picture. They feel pretty good about it.
Yeah, and I mean, we have to kind of circle back, though, to those earnings. And so far, what we've heard out of the few companies that have reported, while it may have sort of missed expectations in the market, it wasn't necessarily dour. And I think that now you move into next week with those big cap tech names like the Apples and Microsofts, and the idea that you get some of those industrial companies like a Boeing, I mean, you're going to get a much better read on how these companies are faring in this environment.
And Tim, we were only joking earlier. Romaine and I were looking at forward PE ratios, and perhaps the difference maybe this time around is, and is Carol Schleif of BMO Family Office Deputy CIO there telling us, maybe this is just a repricing, a rethinking of these valuations, taking some of the froth out of the market. But if you look across to some of the credit spreads, you're not seeing a blowout in spreads, you're not seeing that panic. Is this orderly? We're just not used to it, because usually we don't get 2.5% drawdowns.
Can I raise one other thing, and not to get too pessimistic, but Caroline, you touched on this when you were at your board, is the idea of Ukraine and Russia, and the idea that there's still geopolitical issues that are still unresolved. And you kind of wonder when that starts to have a more material market impact if they don't get resolved.
Geopolitics, and to me, Omicron. Like, I have seen a few readings in the data this week that didn't feel like my glass was half full. I was a little bit more dire and pessimistic about what December and January have really looked like for people's spending, desire to get out there, and what that really means for some of the businesses that don't have the fiscal support they had in 2020.
But Boris Johnson said it was over, Caroline.
Oh, and in UK is a whole different kettle of fish.
Hey, well, I won't get involved in that right now, but I do want to say, you know, there are a couple things that I'm keeping an eye on. COVID cases in New York City, they appear to have peaked in recent days.
Yeah, we're done talking about cases.
Well, I know, but it does change spending.
Any sort of public place lately?
Me?
Yeah, I mean, I asked it in all seriousness because it's empty, and I've been out, and I mean, obviously some of this might have to do with the weather, but you know, we've just the city just has not filled back up, and we're hearing similar stories about other major cities.
Exactly, and so cases, I agree with you, Taylor, that cases are not the best metric to use, but it does cause people to stay home. It does prevent people from going into the office. It just change spending habits. People cancel trips. The flights that I've been on recently have been absolutely empty. So that's revenue lost in those places. What I was going to say is, just driving through New York City yesterday, all of the tents that are set up for COVID testing, empty. Talk about a good sign, right? Remember when those just had lines down the street?
You drive?
No, I was in the back of a car. An Uber.
Citigroup telling staff in New York, come back to the office
There it is.
February 7th.
February 7th. That's
It's
right.
you know, can be a moving target, right? We know that from the last 22 months, right?
Oh, they bring them back. Tribeca's going to be hopping.
All right, they were supposed to be back in the fall of 2020, right? Okay, for the first time. Guys, that is going to do it for our cross-platform coverage of the market close Beyond the Bell on Bloomberg TV, radio, and YouTube. We are going to be back Monday, same time, same place.
Right now, we want to turn our attention to something else that's in the top of mind for many, supply chain issues, the chip crisis in particular. President Biden today pressing lawmakers to pass the CHIPS Act. It will provide $52 billion to boost U.S. semiconductor production. Now, Biden spoke alongside Intel CEO Pat Gelsinger, who announced plans to invest from his company $20 billion to build the world's largest chip manufacturing site in Ohio. Pat Gelsinger, I'm very pleased to say, joins us now. Pat, wonderful to have you on the show, and talk to us about this spending and whether or not the government will be able to line up alongside you and put their money to work too.
Well, today was a great day, and really was an honor to be with the president, Secretary Raimondo, Senators Portman, and Senators Brown. And there really is, I'll say, enthusiasm for this project. And right now I'm here in Ohio with the governor and the state legislator leaders, Ohio state leader, and they're just thrilled to see this project coming to life. But as the question asks, will we get the CHIPS Act done? And I'll tell you, today's announcement clearly is just breathing a bit of energy and momentum, enthusiasm across the legislators. And President Biden and Secretary of Commerce Raimondo were just adamant that we're going to get this done, right? The senators and congressional leaders, good bipartisan, good bicameral support. So we're optimistic. And clearly, as I communicated today, we're assuming we get this done because we want to make this project go bigger, faster, and we're putting our chips on the table already.
Pun intended. Well, let's talk a little bit more about the project specifically, Pat, and specifically what you want to produce out of this plan. Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
Yeah, it's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both. And clearly, we're expecting as industries like the auto segment, which are very prevalent here in Ohio, as they do more AV, advanced 5 and 6G connectivity, infotainment, they're increasing the use of leading edge chips as well. So we do expect that it's going to satisfy a full range of industries, our products, foundry customers, and be a massive kick for making this, as we called it today, the Silicon Heartland. Not just Silicon Valley. Today begins the Silicon Heartland.
So talk to us. Why the Heartland? When you think about some of the economic incentives that were offered from Ohio, why Ohio?
Yeah, and we looked at 35 to 40 sites, many different states across the nation. And we're looking for, a large flat location like we found here, one with great energy and, the ability to have strong support from the local government, labor costs, but more important than labor, talent. And here we are, and we had the president of Ohio State University join us, but many of, essentially all of the Midwest universities are within just a couple of hours of the location that we've picked here. So it's quite central. And of course, Ohio came forward very aggressively with support and economic benefits to really make this competitive. And that's what I've said for the U.S. CHIPS Act. It's not that we're looking for handouts. We're looking to be competitive on U.S. manufacturing with U.S. IP on U.S. soil to allow us to compete, to reestablish a globally balanced and resilient supply chain. And I think today's step forward was a huge step in that direction.
Talk to us about how quickly the U.S. can regain that, how quickly you think these supply chain issues that have been such a headache for your industry, for all of the supply chains that you then have to serve the auto industry and many other. When can that be finalized? How quickly, in a long-term sustained manner, will we see growth?
Yeah, today's announcement, we're just, hopefully later this year, we said we want to have shovels in the ground, and this factory won't come online until 2025. And obviously, for all the consumers of chips, it's sort of like, wow, that's a long way out. It takes a long time to build such an advanced manufacturing location. And that's part of the problem of the near-term shortages that we're facing. It just takes a long time to build these very advanced, sophisticated facilities to expand the semiconductor supply. Now, the industry has done a great job. We've gone from maybe 4 or 5% growth to almost 20% growth last year. However, we still expect that through 2023, that we're still going to be facing supply shortages. We just can't ramp up fast enough to this global surge in demand, and COVID interrupted supply chains, and it caused work from home. Everybody needs a PC now at home, not just one, mom, dad, the kids, everybody needs one. And we've seen this across industries. And through this year into next year, we'll still be fighting to overcome the shortages.
For our audiences out there on TV, radio, and YouTube, we are in conversation right now with the CEO of Intel, Pat Gelsinger. Pat, I'm curious about just the change in strategy for Intel. Obviously, you're relatively new in the job as CEO. Your predecessor, Bob Swan, had actually entertained the idea of actually doing away with a lot of the in-house manufacturing that Intel does, even outsourcing a lot of that. Your strategy is clearly taking the company in a different direction. And I'm curious from a profitability standpoint, a cost basis standpoint, and also a competitive standpoint versus, TSMC and some of the other folks that are in this same business. How is this strategy going to match up with that?
Yeah, there's really 3 companies, 2 in Asia, TSMC and Samsung, and Intel in the U.S. that can manufacture at these leading edge technologies, as I say, going into the angstrom era. And when I came into the company, was interviewing for the job with the board, I said, boy, if you want to break the company in 2, I'm not the guy. My strategy is we are going to build, and we're going to build aggressively our capabilities, but also become a foundry for the industry. And the margins of the foundry business are good. And I believe if we have leading technology capacity like this, we're going to be very effectively competing. But it's also more important than that. It isn't just an Intel statement. This is an industry and a United States statement as well. We believe that this is more important to humanity than, as I've said, where the oil reserves are. Every aspect of your lives is becoming more digital. Everything digital runs on semiconductors. We need this for our economy. We need it for our supply chains. We need it for our national security. And Intel is really the company that can step into this. We've said decisively, and with today's announcement, we're going to step into this aggressively. We're going to build in America and Europe, be a major supplier of our products, but open the doors wide to become a foundry. And we believe that we have the technology, the opportunity to do so at scale, competitively. And today, the Silicon Heartland begins.
Where is the future end market? You said for PC or smartphone users, hearing that one of the new facilities won't be open until 2025 seems like a long time away. We could also be shifting the market. And I'm curious, that end market on a 5G, you even mentioned a 6G, what does that next generation look like?
Yeah, the factory that we're announcing today, 2025, but we're just about to open a new factory in Oregon. We're already well underway in our Arizona factories. We have builds in Israel and Ireland going on as well. So we're rapidly expanding capacity. And those will be coming online over the next couple of years. And it really is servicing a very wide range of markets. It's everything from PCs to cloud providers to 5G and edge solutions, also enabling high-performance AI. Increasingly, we're finding more of our chips into the automotive sector, industrial sector. As I've said, cars are becoming computers with tires. Today, about 4% of the bill of materials of the car is semiconductors. By 2030, that's expected to go 5x that to 20%. So, they're becoming, the most advanced infotainment, autonomous driving, electric vehicles, all of these are driving this explosion. And this investment is to cover a broad range of market segments. It will be, our most leading edge technologies, potentially the largest manufacturing location for semiconductors in the world, right here in the Silicon Heartland.
Pat, talk to the people who say people have just brought their ordering forward. They've panicked. They're worried that they're short of supply right now. The people have been stuck at home, bought all the pieces that they possibly need. How sustainable is the demand that you speak of that has ramped up to 20% over the next few years?
Yeah, we do think that there's a step up in the industry, and we analyze this very, very carefully, both in the PC segment, the cloud segment, but in a broader set of areas as well, such as graphics and this network edge build out with 5G as that becomes deployed. But you're seeing this in every aspect of human life, even the development of the vaccine. Right? It was run on computers, right? Essentially the RNA sequencing is done on computers. Every aspect of healthcare is becoming more digital. Every aspect of our human experience, our social experience, we don't think that work from work is the returning. It's work from anywhere going forward. So we do see this as a new model of work that is more productive for the future. We see education becoming less and less about where you are, but it is about what you're able to participate in. So all of these changes, we don't see this demand decaying back post-COVID. We see it being a sustained acceleration of the digital experiences. And that's why, our corporate statement and our vision is that we will produce technologies that improve the lives of every person on the planet. That's what we're about. And we see no end of that digital demand.
We want to thank you for spending some time with us, Intel CEO Pat Gelsinger, of course, about...
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So interesting interview. Pat Gelsinger, CEO of Intel, of course, a giant has-been in the semiconductor space, talking with our TV colleagues over on Bloomberg Television. They're going to spend big time, Tim, and to some extent it's playing catch-up, but we know that the payoff of building these fabrication joints it takes several years before you start to actually see it impact production.
Well, that's the thing, Carol. And we're seeing it impact over the last year. We've seen the chip shortage hit everything from small devices like the iPhones that we keep in our pockets and smartphones we keep in our pockets to refrigerators in our kitchens, and of course to cars, because chips are in everything. And the problem with just building a factory and a plant right now is that the payoff from that is years away.
Right.
And what the president spoke about earlier today was the idea that this would help ease the inflationary pressures, but it doesn't do anything overnight.
No, exactly. And what's interesting, and I was just thinking, listening to the question, and, kudos. First of all, it's a great win for Ohio. We're talking about 20,000 jobs in the state, 3,000 direct Intel positions, earning an average of $135,000 a year plus benefits. That's a pretty good salary. And so that will certainly have an economic kick to that state. But I do wonder, what is it a company is doing like Intel to anticipate what they're going to need in a few years, especially in a society, like as you said, there's chips in everything. So what's the data that they are relying to so that they can do these predictive models, because these investments take years to pay off?
It's not just Intel that's making these investments here in the U.S. either, Carol. Samsung and Taiwan Semiconductor Manufacturing Company, TSMC, they're also expanding their investments in the U.S. They're hoping to build new fabs with funding from legislation that has stalled in the House. This is known as the CHIPS Act. The other part of this, too, is the war for talent, right? And you mentioned the thousands of workers in Ohio. And where they get those workers, right? Where people are moving, where people will be able to live based on the increased cost of housing and living in so many areas of the U.S.
Well, and what's interesting is you think about how companies would often go to the areas where they think the workers might be to some extent. I mean, they also go to places where they can get great tax exemptions. But it's interesting, and I think about my conversation with Chuck Robbins of Cisco. He, made that point. And again, tech companies, have already been embracing hybrid work pre-pandemic, but this whole idea of maybe even leaning much more aggressively into this idea that I can hire a worker from anywhere. They can live anywhere because we can work from home so productively. Even the amount of innovation that could be done during the pandemic, that was a surprise to Chuck Robbins.
And I don't know what you can do when it comes to chip fabs, though, and how remote that work can be, right?
Yeah,
certainly a lot of the engineering can be, but we're talking high-tech manufacturing here.
Yeah, exactly, right. And that has to be on location at a place. I'm assuming a fair amount of it is automated at this point, but you still need individuals. Nonetheless, investors, I meant to take a look at what Intel, how it closed today before we got into our chat. I'm just pulling it up here on the Bloomberg. Looks like, was it flat on the day? Wow, that's interesting. So little movement. So, investors probably appreciating maybe the investment, but also realizing, right, it's unchanged.
Yeah, totally flat today.
Yeah, that's why I wanted to make sure I pulled it up correctly. The stock is up about 1% so far this year. We know tech overall has been taking a beating, but it's interesting. This is going to take a while to pay off, but nonetheless, the investments are there.
They certainly are. Hey, Carol, I'm wondering what, on the other side of the pandemic, are the major changes that we see? Certainly an onshoring of chip manufacturing, I think, is one that we could at this point argue is a big shift, and one I think that a lot of people wish would have been done 5 or 10 years ago.
Right.
But does the just-in-time theory of the supply chain, does that change at all?
I don't know.
Because that's a lesson from the pandemic, right? That didn't really work, and that's why we saw such hiccups at the beginning and throughout the pandemic. But I don't know.
I don't know, because companies get penalized when they have too much in inventory, and, that shows up on the balance sheet, and investors don't love it. So we'll see if that changes. Hey, one thing I do want to mention, certainly doesn't seem to be changing, is the big salaries that we're seeing when it comes to CEOs of the big banks. Just crossing the Bloomberg a moment ago, Morgan Stanley's CEO, James Gorman, his total compensation for last year, $35 million versus $33 million in 2020.
Comes after we learn that Jamie Dimon is getting a raise for this year as well.
All right. We're watching that. We're also, we were really lucky this week to catch up with a bunch of CEOs thanks to the Year Ahead Summit that Bloomberg put on, and also an event that was dealing with sustainability and how do you take kind of goals and really make it into action and impact. And with that in mind, I did catch up with the CEO of the world's biggest brewer. We're talking about AB InBev, Michel Ducaris. He joined me for a wide-ranging conversation, and here's some of that chat in where he talked about sustainability goals, but he also talked about the current environment. Check it out.
We are definitely moving into a better period after all these disruptions in COVID. I think that unfortunately we are not there yet 100%, because you know that some countries are getting now Omicron, and as you get the wave of Omicron, some more disruptions in supply chain will happen. I think that this will continue to be a topic this year, and more so in the first half of the year, while in the second half of the year things will be better, but it's not going to be fixed at all this year. So supply chain disruptions will continue to be part of our conversations. It's going to be more in the first half than in the second. The second big issue is inflation. I think that inflation is an issue globally. It's not going to be away very quick. We are still in the middle of the wave, and that has an impact in consumer purchase power, and this is everywhere. But of course, the more consumers are under pressure in developing and emerging countries, the more this will be a disruption. And then I think that the third point that's going to be for second semester is once everything settles down, we will see that this difference between people in emerging developed countries and developing emerging countries will be different, the post-COVID, and we'll need to benefit from productivity. We'll need to benefit from the technology step up that we had during COVID so we can close this gap. But I see like a tale of two different stories in the after COVID, this so-called elephant type of economy, right, where the developed mature countries will accelerate further, while the developing countries will need first to correct the trajectory and then later reaccelerate. But it's supply chain disruptions, it's inflation, and then the two stories of the mature and developing countries that will need to have different actions after COVID.
Yeah, continues to make it tricky. So I'm thinking about, because you guys have had such success, what would be your advice to some leaders out there, C-suite leaders who are saying, okay, we get it. We know we're kind of at a tipping point when it comes to climate change. Here's a company, AB InBev, that has set emission goals years ago, and they're hitting them ahead of schedule. What's your piece of advice to them on how to do it?
Yeah, I don't think I have like advice to give to all these clever people out there. I think that I have a little bit of our own experience. And if I would say that is, what is the right side that you want to be in history? We all know what the right side is. Second is the confidence that you can find tools within your business to improve your own efficiency, to better connect your ecosystem around targets that are shared and make everybody more efficient, and that consumers are a very important part of this equation. So there is always a way to connect your brands and products with things that consumers want to support, and therefore you close the loop in how sustainability becomes part of your strategy and not a distraction. So for us, it's part of what you do. It's our business. We are in the sustainability business because we are inclusive, we are natural, and we are local. And when you think this way, your category and your products, they need to do what is right to do in terms of sustainability.
And that was Michel Doukeris. He's the CEO of AB InBev, a beverage giant. And I got to say, Tim, I mean, they really have been working on sustainability. It's not just a few years. It's a long time. But I mean, they've got to have access to clean water and lots of water and farming and barley and hops. Otherwise, their business just doesn't happen.
Yeah, that's a good point. I mean, it reminds me of what happens with the ski industry, right? They need to have snow in order to have a business. We've spoken to Rob Katz, the former CEO of Vail Resorts, who talks about it in a similar way. But there's also the customer element here too, Carol, and the idea that people, at least according to the studies we see, do like to support brands that support causes that they believe in. And that's a big theme of was 2021, and I think a big theme of 2022.
And that's a big reason behind their Michelob all organic brand that's out there. I mean, customers wanted it. All right, let's get back to a look at your top business stories, some of the news after the close. Once again, here's Charlie Pellet.
Thank you very much, but I like talking about beer. Love hearing what you guys have to say. It's Friday. Here's what's going on. The Dow, the S&P, Nasdaq all lower today. What a day, what a week. Let me begin with the weekly numbers. The Dow this week down 4.6%. The S&P this week down 5.7%. Nasdaq this week 7.55%. Usually we quote these numbers in tenths. Today we had the S&P tumbling 84 points, down 1.9%. The Dow dropped 450, down today by 1.3%. Nasdaq lower by 385 points, down 2.7%, extending its loss for the month of January to 11.9%. We're capping the worst week since the outbreak of the pandemic world markets, the worst week since March of 2020. Tech shares bearing the brunt of the sell-off amid shaky company earnings and prospects for higher U.S. interest rates. Nasdaq 100 index down 2.7%. Broad-based selling. Russell 2000 slumped today by 1.8%. So what should investors do in this environment? Alan Lance is research director at www.lanceglobal.com. He was our guest right here on Bloomberg Business Week.
What we're telling our clients is that the situation where you want to buy and it'll probably go lower. We're not going to pick a bottom. We're not that smart. But, I think 2-3 years from now, these prices that we're buying, just like when we were buying in January of 2009, will really look, good. And that's the theme.
10-year yield right now, 1.76%. 10-year up 10.30 seconds. Gold down 0.4%. 18.31 the ounce. West Texas Intermediate crude down 0.9%. 84.75 a barrel. Bitcoin cannot ignore that. Back below 38,000, 37,771 on Bitcoin. Down now, plunging 8.7% on Bitcoin. Also, shares of Netflix today after last night's earnings report down by 21.8%. Recapping stocks lower. S&P down 84, drop there of 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you might recall a November Bloomberg Business Week cover story. Tim, remember this? It was about the company 23andMe and how it's looking to use all the genetic information it collects to enable it to make and sell its own therapy. So, the world of genetic testing and using it as a diagnostic tool continues to grow and to really create new therapies.
Yeah, a far cry, at least for that company, from the original premise, right? Of helping you identify where you're from.
Well, this next guest has spent more than 2 decades in healthcare. She's president and CEO of the Genetic Testing and Genomic Company. She's Catherine Stuland, and as I said, CEO of GeneDx, and she's on the phone in Bethesda, Maryland. Catherine, so nice to have you here with Tim and myself. Tell us a little bit about your company and what's going on when it comes to genomics and genetic testing being used to really develop therapies and improve the way we address healthcare.
Certainly, and I'm excited to share with you what I think is really a new era in terms of delivering on the promise of the Human Genome Project, as well as something that we've been talking about quite a bit, which is precision medicine. GeneDx was spun out of the NIH 20 years ago and really was known as the company who doctors relied on for the hardest to diagnose patients. But over time, our scientists have been quietly pioneering the next generation of genetic testing that looks deeply at the totality of the human genome to be able to provide a faster diagnosis for patients, and in turn be able, based on the results of our genetic test, be able to tell you what therapeutics might be able to help you get on a healthier path sooner.
Well, help me understand where patients use this and at what point in their lives they use it, because up till now, and I don't want to give away too much of my medical history. I'm talking on, national radio here. But my only encounter with genetic testing personally has been when my wife got pregnant with our son. Mm-hmm. And I think that's where a lot of people first interact with it, when, the person who's pregnant and then the partner get tested. But that was it for me.
That's true for so many people. Right now, genetic testing is being used in that setting, frequently when a woman is thinking about having a baby or she's pregnant, and she'll do a test. She and her partner will do a test called carrier screening. But then what we're able to do on the other side, once there is hopefully a healthy baby, is be able to ensure that when there is a symptom that child may be displaying, if God forbid, the baby's in the neonatal intensive care unit or as a toddler, we're able to provide, based on that baby's genome, rapid information that helps get to a diagnosis, a definitive diagnosis sooner, which is critically important when you're thinking about neurological conditions that could be impacting that child, and then getting them on that treatment. The other time that people are utilizing genetic information often is when they have a cancer diagnosis. So right now it really is being used in the symptomatic setting. But genetic information can actually be used in a preventive way to be able to get ahead of developing symptoms and being able to keep people healthy versus diagnose a disease that's already in progress.
So I think about things, Catherine, that are just like diabetes, right? Which is really, we talk about pandemics, right? It's really becoming a global pandemic in terms of the amount of people who have diabetes. How can we use genetic testing? How are we maybe already in terms of anticipating it or somehow getting better control of it? Because it really just seems like it's out of control.
So genetic testing right now is really best utilized in settings such as cardiovascular disease and oncology, and the pediatric setting for neurological disorders or autism, as well as you mentioned earlier, in the prenatal setting when we're trying to assess risk when it comes to a pregnancy. For more common conditions that are metabolic in nature, like diabetes, there's still a lot of work that needs to be done from a technology standpoint to really help us better understand the specific role of genetics that might predispose somebody to being somebody who will have a more severe condition. So there's a lot of work going into that. You'll hear in the future more about something called polygenic risk scores, which is for the broader, more common conditions like diabetes. And I think that that's going to be on the horizon over the next 5 to 10 years. We're still in the earlier stages for those sorts of conditions.
Sit tight for a second. We've got to do a little bit of news, Catherine, but we'll come back and continue. Really interesting and curious about the medical community, the health insurance company, how they are increasingly embracing this area when it comes to its helpfulness in terms of figuring out healthcare or possible needs. What were you thinking?
Hey, one interesting thing is talking to friends about, I'm at that age where a lot of our friends are getting pregnant or having the second kid. We talked to some friends who had a second kid. They repeated the genetic testing again, even though they had done it ahead of time before their first baby. And they did that because the company had actually identified more genes in the 2 or 3 years since they had their previous baby.
So it's just an acknowledgement of all the information that continues to come out. All right, we'll continue with Catherine Stuhlen. She is the CEO of GeneDx, and we'll get to her once again in just a moment.
In the meantime, let's get to Washington, D.C. for a check the latest world and national news. Nancy Lyons is standing by. Hey there, Nance.
Thanks, Tim. President Biden is thanking the nation's mayors for helping get the sweeping infrastructure bill through Congress. Biden spoke at a meeting of the U.S. Conference of Mayors today and says the measure is already bringing change to the country.
In just 2 months, we've already seen this law start to make a real difference, creating better jobs, transforming our communities in tangible ways.
The Biden administration also announced today a joint effort with 2 states and more than 30 cities nationwide to develop standards to make buildings more energy efficient and climate friendly. Thousands are in Washington today for the annual March for Life rally. They've been protesting abortion ahead of tomorrow's 49th anniversary of Roe v. Wade. Jean Mancini is the organization's president.
We march today in defense of human rights and to celebrate the dignity and worth of every human life, because equality begins in the womb.
This year's event comes as a conservative majority on the Supreme Court considers overturning Roe v. Wade. 2 losses today in the entertainment world.
And I would do anything for love. Oh, I would do.
Meatloaf, whose Bat Out of Hell album is among the top 10 of all time for sales, has died. He was 74. And actor and comedian Louis Anderson has died at the age of 68. He liked to poke fun at his weight.
I just had my ancestry done. I'm 20% Norwegian and 80% butter. For from the Land O'Lakes tribe.
Anderson had been struggling with blood cancer. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
I think I'm from the Land O'Lakes.
That was funny.
It's very funny.
Yeah.
I love comedy, and sad to see. We've several comedians in the last week or so. Just very, very tough in terms of those situations.
Hey, I can just say it.
What?
2022 off to kind of a rough start, okay?
God. Can
I say that?
Audience, I know you're tired of my headset, and I know it makes a lot of noise.
Yeah, you're getting a lot of flack for that.
I know, and I'm really sorry, and thank you for still listening. I'll be back in the office, fingers crossed, on Monday, and so I'll be back in the studio with Tim. But you and I were like messaging, and we're like, geez, 2022, I mean, we know people pass away. Unfortunately, it's part of life, but it's just felt like nonstop.
Yeah, it really has. Speaking of rough start to 2022, Kathy Wood has had a rough start to 2022. You sent me this story earlier in the day. I know it got your attention. You've heard about this short ARK ETF, right? It's the anti-ARK ETF. Mm-hmm. It's actually done pretty well in just a little bit of time. It's the Tuttle Capital Short Innovation ETF. The ticker is SARK. It now boasts an impressive haul for a fund less than 3 months old after returning around 50% since inception.
Wow, that's pretty significant. Well, and essentially, as she doesn't do so well, this fund does well.
Exactly.
And that's what we're seeing. I mean, we'll see what happens. This fund basically uses swap contracts to short the fund. The Tuttle product has won a slew of fans in the tech rec, posting positive inflows of 10 days and running. So it's pulling in a lot of money.
It is, but it's still pretty small, right?
Yeah, in comparison.
Our own Eric Balchunas, who covers ETFs for Bloomberg Intelligence, said, quote, any indie ETF that gets over $200 million in assets has beaten the odds, let alone doing it in its first 3 months. So it's significant in that sense.
Right. But, not surprising, right? As the tech sell-off has happened, as we've seen certainly Kathy's, iconic fund losing, a lot of money and coming down, or at least a lot of the investments in it losing ground, it's not surprised to see the flip side of that trade moving in. Longer term, we will see what the ultimate trends will be. That's all I'm going to put out there. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Technology led stocks to the worst week since March of 2020. U.S. stocks had the worst week since the outbreak of the pandemic. World markets, tech shares bore the brunt of the sell-off amid shaky company earnings. Netflix shares extended their slump today. Netflix down by 21.8%. Peloton bounced back today. We saw Peloton shares up by 11.7%. Bottom line, losing day, losing week as well on the week. The S&P was down 5.7%. Today, the S&P down 1.9%, tumbling 84 points. The Dow dropped 450 today. Late day selling with the Dow down 1.3%. Nasdaq down 385, a drop of 2.7%. 10-year up 10/30 seconds. 10-year yield 1.76%. Gold down 0.3%, 18.33 the ounce. West Texas Intermediate crude down 0.9%, 84.77 a barrel on WTI. Citigroup is asking staffers in the New York City region to begin returning to the office early next month as coronavirus cases start to recede in the area. Today, Citigroup shares down 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to Catherine Stuland, CEO of GeneDx. It's a medical genetics company. It's got the largest clinical exome data set in the world. Catherine, I want to talk more about the business here because I think when it comes to products such as yours, the customer isn't necessarily the end patient. The customer is the provider who is prescribing it or who is actually telling the patient that they should get it. How does that sales process work, and how do you get your product more in the hands of more providers?
So it's a really important partnership that we have with a provider, a patient, as well as with a payer. And we very much believe that it is the most responsible approach to be working in that partnership because we're delivering information that is actionable, meaning we're providing a genetic report that is saying whether or not somebody may have a health condition that they may need to, undergo some sort of therapy for, or change another aspect of their life. So it's really important that we are working in partnership there. The way that we work today is we sell our testing directly to clinicians. Mainly this has been to medical geneticists who are kind of the experts when it comes to genetics. But we're seeing a broader group of clinicians, as we mentioned earlier. OBs are using it in terms of assessing risk for pregnancy. Oncologists are using it to assess risk overall, as well as what treatment might be best for a patient. So we're starting to see a shift from the expert setting of medical geneticists into broader mainstream medicine. And so we educate providers about our services, and we work with them to ensure that they have all the tools that they need to inform their patient as clearly as possible.
Let me ask you something. Do you think all babies should get genome sequencing? And mind you, this is your business, so I understand where you're coming from. But do you think it's a smart strategy?
So I think that there's a lot of nuance involved in the question, because ultimately what we want to be able to do is have information on hand to be able to provide a rapid diagnosis as soon as somebody is showing up with a symptom. And I can tell you, if you look in the case of pediatric conditions, right now, as it's utilized today, genetic testing can be used too late, meaning that there's damage being done to that child, and they may not be eligible if they get a diagnosis too late for certain therapies. So one of the keys to using genetic testing is having it on hand to be able to use it as rapidly as possible to rule in or rule out whether or not there is an underlying genetic condition. So I think it's important that we all have access to that information. There have been some cases where there have been studies where they've done sequencing at birth and just provided the parents with an entire litany of information that the parent doesn't need in that moment at all. And that's not the way that we see this happening in the future. What we see happening, almost similar to cord blood, but being medically actionable here, is being able to sequence a baby at birth and just hold that information on behalf of the parents and the clinicians and that individual. And when there is information that they need, we're able to come in and provide a definitive diagnosis or tell them there's not a genetic issue here, and then they can quickly move on.
Hey, Catherine, more on the business. You recently announced that Semaphore was buying you guys. Semaphore is an AI-driven genomic and clinical data intelligence platform company. You are going to serve as co-CEO after the acquisition is complete. Why does this make sense? What are the, for the lack of a better term, synergies here?
So Semaphore and GeneDx are completely complementary. Each of us is doing something distinctly different, but we have technologies that are going to accelerate the use of one another's technology. So in the case of Semaphore, they do carrier screening. They have built a patient experience where they're able to connect with a mom-to-be and ensure that she has an understanding of what happens when she's doing her carrier screen. Once the child is born, that's where GeneDx's technology comes to bear. And we're able, again, in the event that there is some sort of symptom that the child is showing, to be able to then provide a diagnosis. So we're able to essentially pick up where Semaphore leaves off from the pregnant mom-to-be to now a mom who has a child who needs an answer for her baby. The other thing that we've done with our exome and our genome, that is ultimately going to be the backbone for all of the testing that Semaphore does. So we're able to get a more comprehensive set of data that feeds their data engine called Centrellis, that also takes a look at EMR data, clinical notes, and is able to then ingest it and ensure that every patient that we're testing gets the most accurate information possible.
Hey, Catherine, one last question, and I kind of want to end with where we started. We talked about a Bloomberg Businessweek story that talked about the company 23andMe, how they are working on drug developments in-house. They're using the genetic material that they're capturing from all of us, and I think 1 in 5 Americans have done one of these, whether it's Ancestry or 23andMe kind of tests. Do you think this is a good idea? And just got about a minute or so, about 45, 50 seconds.
Certainly, and I'm one of those people who has done 23andMe. And in fact, 23andMe kind of scratches the surface of the genome. What we do at GeneDx is deep genomic sequencing, and it's the totality and richness of the genetic information that we provide that, in working with pharma companies, is going to actually be the key to being able to more rapidly discover new treatments, more rapidly bring new treatments to market, and make sure that we really bring the promise of precision medicine to life.
Well, it's certainly an interesting field. Catherine, thanks so much for carving out so much time for us. Catherine Stutland, she is the CEO of GeneDx, joining us on the phone from Maryland.
Well, let's head over to Washington, D.C. for a check with Joe Matthew. Hey, Joe, what do you have coming up on Sound On in just a few minutes?
Hey, guys, we're actually, we're a little concerned about things going into this weekend with an eye on Ukraine. This is how we're starting the second year of the Biden administration. Now, this headline on the terminal that we're considering pulling diplomats' family members out of Ukraine. Like, what does that mean? We're going to get into the strategy with Nick Wadhams coming up. We're going to talk to retired Marine Corps General Arnold Pinaro about the strategies here and just what we might expect this weekend.
It does feel like it's heating up. Are you guys supposed to get snow again, too?
They keep threatening, and they're going to cancel school before anything hits the ground, Carol.
I know.
Good luck, Joe.
Have a great show. Joe Matthew with Sound On coming up. For Tim Stanovic, I'm Carol Massar, and the entire Bloomberg Businessweek team. Have a good and safe weekend. Catch our show on Bloomberg Radio at 8 a.m. on Saturday.